All right, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I'm joined today by Scott Redler. Scott is the Chief Strategic Officer at T3 Live. He's a professional trader with T3 Trading Group and also the moderator of T3 Live's Alpha Team virtual trading floor. And thanks so much for joining us today, Scott.
Well, thanks for having me. How are you today?
I'm doing great, and I'm excited about this conversation that we're going to have today for our audience. But first, let's start off with you, Scott. Introduce yourself to everyone. Tell us how long you've been trading overall, how long you've been with T3, how you got involved with T3. I know a little bit about this story, but just give us the Cliff Notes version so everyone can know who you
I was about to say, how much time do we have?
are. Yeah.
I'll give you the quick and dirty. So I started trading in 1998. I started at Broadway Trading. I traded through the tech bubble bursting in the year 2000. We had about, I don't even know how many traders. We had probably 800. Everyone thought it was a get rich type of situation. And then boom, just like that, the NASDAQ bubble burst. By 2002, our group was like 30 guys. Then like 2003, the new bull market started. So by that point, I was pretty seasoned. I was a manager with a friend of mine at Sperling Enterprises, which actually was with Schoenfeld. And then we wound up merging with T3 as a founding partner. Not sure if T3 we founded in 2004, 2005, but it was somewhere around there. So all I know is we signed a 12-year lease, I do believe, and we just ended our lease last year. So you do the math. I don't want to get into it. It's been a long day. If you trade, you know this action has been a little predatory, so my brain's a little fried. So with
Yeah.
that being said, right, 2007, 2008 hit, and that is when I actually had my start in the media. I've been on CNBC or in the media probably once a week since 2008. Greta, what year are we now?
2023.
It's a long
So
time.
15 years. Yeah.
15 years of probably being in the media once a week. Not
That's great.
because I act like a bull or a bear, just because I tell it like it is.
Yeah.
I don't know.
It's great for people who are looking for, insight from active traders who are doing this day in and day out. You're that. You're not just opining on your thoughts on the market, but you're in this action. You're doing this every single day, and that's important. Quickly, for everyone that is attending, I do want to let you all know that this will be open for a Q&A session after Scott and I get through our conversation here. So if you want to go ahead and start submitting your questions in the chat, go ahead and start doing that. I will monitor that. I will go through them. We will try to answer everyone's questions as best as Scott can. So go ahead and start submitting those. All right, Scott. So I want to talk about currently what's happening. So if you had to give your week of trading so far a grade, A, B, C, D, what would that be?
What would that be? I'd probably say a C plus.
Okay. And why?
Okay, because I kind of know we're in a corrective phase. We've been in a corrective phase since like February 16th. If you actually, Greta, put up the chart of the spies, you'll see that on February 16th, I kind of went out there in the public and said, hey, we were in an active sequence long since about January 6th, and it ended on February 16th when the spies broke below 409.50. So I should know better than trying to play something that I could buy and actually make a higher high. So this week, yesterday, post earnings of NVIDIA. NVIDIA, to me, was a very strong earnings report. You can actually put up the chart of NVIDIA. It's a little out of the order, but NVIDIA had a nice move post earnings, and I like to play a post earnings gap play to figure out if there's more upside. And I tried playing it yesterday. It couldn't get through, if I remember, around 238, 239. I said I wasn't going to trade it today, and I wound up trading it today. And I went from pretty strong to falling apart at the end of the day. So the last 2 days, I lost money trying to buy NVIDIA for a break above the post earnings high. And I should have known better considering I'm pretty tactical. I know the market's kind of pressured. We're in an active bearish sequence. So what was I thinking to try and play a stock to actually make a higher high on this week when, that was January, not February. So I give myself a C plus. Plus I was up money both days and I gave a bunch of it back by over trading and thinking that I was missing out.
I want you to expand a little bit more on that, on the over trading and thinking like you were missing out. That's something that I think a lot of younger traders, inexperienced but also experienced traders like yourself, struggle with. How do you overcome that and move forward? What's your strategy for that?
Well, you try and figure out what market are we in. Is there upside follow through? Is there downside follow through? Where's the oscillator? Are we overbought? Are we oversold? Are we in a choppy state? Are things giving you momentum? What's the composure? So, again, this week I kind of knew we were in a little bit of a defensive position because we were in an active sequence to the downside, but the oscillator was oversold. We were like minus 60. So I figured maybe a small little portion of strong stocks could continue to trade decently. And they actually gave you some trades, but they gave you no upside follow through. So adding to even a strong stock for a moment, definitely did not work this week. So you could turn a good trade into a bad trade. Or, I was long on Friday because it felt like we put a short-term bottom in. And by Monday with the gap up, I wound up making pretty much what I'm happy making in a day. And then I kind of over traded that away. And by the end of the day, it was red. And I should know better than that.
Okay, so February is now officially over on Wall Street. And as you've kind of mentioned, it's been a tough month of trading after we had that really rosy January. After that, December into January was pretty rosy. What was your strategy throughout the past month as that corrective action started to happen?
Well, from January 6th up until early February, you got paid for holding positions in what I call a portfolio approach. I tried to be in 10 to 15 positions using my tier system, creating cash flow, holding some names to let the market make me money. And then once we got above that 4,100, I wasn't sure. I wasn't sure if we could continue or if we were going to do a false breakout because of positioning. And then once February 16th happened, where we broke back below 4,100, I tried to get tactical. I tried to reduce risk, which I did. And I actually even bought some puts. I made some money short, but still there was definitely some slippage there. So now, for this month, I'm in tactical mode. What's going on right now is this. Yields are now, pretty much the market thinks that it will be higher for longer, which the market didn't think that was the case a few weeks ago. My base case was we're going to be, higher rates for the end of the year, no cuts unless the S&P fell apart, and fall apart to me is 3,500, not, just off the highs. So at this point, the Fed has to go, in my opinion, for the rest of the year. First of all, they have to go like 2 more times to the upside and then hold it there. And I do think that these higher rates are going to filter into the consumer. We've started to see that. It's going to hurt earnings. We've already started to see that. And then all of a sudden, people are going to be talking about how the PE of the S&P is too elevated, and that could create a little bit more downside over the next 3 months or so. So I'm going to be a little defensive. I'm going to try and pick and choose my trades like I did in 2022. I think in 2022, I was in like 95% cash for most of the year. I like to be fully invested. I like when the market's trending. I like to have 20 positions, but that's not the case. And as of right now, I'm going to be watching yields. I'm going to be watching inflation. We're kind of going data point by data point. The last 4 were hot. That's why we came in. So now we have to see the next set of data points, and the next set of data points start, I believe, on March 10th, if I'm correct, with the jobs report. The hot jobs report was the last one that started this hot sequence of data, which created equities to the downside. So we'll see how that goes. But between now and then, it's a week and a half. So first thing I'm really going to be looking at is how does the market react to Tesla's event tomorrow, because Tesla has been a barometer of risk. If you want to, Greta, show Tesla on the screen. I'm actually going to put the chart up myself also. I have it right here. Today it hit 211-ish. I would think as long as it holds 203 tomorrow, it's still intact. Or if it starts breaking below 201, 203, especially post-event, then all of a sudden this inside range breaks to the downside, and I have a feeling risk will come off. If I don't know what they're going to say that could excite people after a move like we've already seen in January, if all of a sudden it gets above and stays above the resistance that I showed between 214 and 217, which is also the 200-day, there's a small chance that it can go to 225-ish, and that would cause an oversold bounce into the end of the week. I put on some Tesla calls because I don't like to be in for a binary event. If it triggers throughout the day, I'll trade the stock. But if it comes out with some kind of news of a buyback or a $25,000 vehicle or whatever the market wants to respond, well, I want to have a small amount of it on just in case. But just like earnings, I don't take stocks into earnings because anything can happen. I take options because risk is premium paid.
You lead me right into my next question that about earnings. This is the last big week of fourth quarter earnings. We're pretty much done after this. Mostly focused on the retail sector this week. We already saw Target today. Lowe's is still coming. Macy's, Dollar Tree, Kroger. Got the grocery stores in there as well. What has been your strategy for this earnings season?
I've been watching to see where these names were in December and early January because a lot of them had pre-earnings move. So when something has a pre-earnings move, that's a big one, then it can't
Mm-hmm.
be a horrible report and go higher. It has to be much better than feared. If
Mm-hmm.
you didn't go anywhere and it's trading at the dead lows, then it doesn't have to be, too much better than feared for it to actually go higher. So I look at where the stock was, and then I look at, what the report is. Sometimes I trade it after hours. Sometimes I wait till the day after. The beginning of earnings season gave us clues that the January rally could continue because if you remember, Netflix was the first real report that gapped above resistance and held it and gave you continuation. So that
Mm-hmm.
gave a little confidence that a stock like Tesla could do it, which it did. AMD did it. Actually, Meta even did it. And then Meta actually was the first name that had a huge earnings gap that started to fill it. And that's when some risk started to dribble out. So there's lots of different ways to approach earnings season. What I will do is never take a stock into earnings because that could ruin your month and your quarter. It's a guess. If
Mm-hmm.
you think there's a good setup, you take options because risk is premium paid.
All right. So you mentioned the Tesla investor event that's being hosted tomorrow. In addition to the investor event, we're getting Rivian earnings today after the close. I think they did already come out. Do you expect any type of impact on Tesla from Rivian and their results?
Not really. Rivian is like the tail. I talk about
Yeah.
sectors and I talk about when the dog is barking, like ruff, ruff, ruff. That's Tesla. When Tesla is loud and Tesla is barking and making moves and running fast, the tail wags, and then all the little EV names like a Rivian, a Lucid, a this, a that, they can all ride its coattails.
Hmm.
Tesla's not going to be that affected by Lucid, or Rivian,
Right.
but it's vice versa. Same way with AI. AI has been the code word, it's been the hot term, and AI itself, the symbols went from like 9 to 30. And while
Hmm.
that was happening, all the other little ones, the little tail that's wagging, also had some big moves. But once AI stopped barking and stopped making higher highs, the news of AI on the little ones stopped going up. So you always want to see who's the lead dog. Tesla's the lead dog. I think Rivian's down after hours. I think there's going to be more eyes on the event than how Rivian responds to tomorrow's action.
Okay, I do see some questions coming in, and I want to encourage everyone to continue submitting those questions. I will ask Scott them in a bit. One I want to get to right away, though, is from Michael, and he asked, "What does RDR equals 117 refer to on the Tesla chart?" So this is a red dog reversal, and this is one of your big things. So explain what that means for Michael, who maybe has never heard about a red dog reversal before.
First of all, Michael, you could Google Red Dog Reversal. There's actually a page of examples of all of them. So
Yeah.
a Red Dog Reversal is awesome. It's a way to catch a calculated trade defined. Usually what a Red Dog Reversal is when a stock comes down, like just say from 30 to 26 to 24 to 22 to just say 19, and you weren't part of that down move because you were strategic, you get out of the way, and you were like, okay, now it's down 4 days in a row from 32 to 19. So people think, hey, this stock's going to 10, all right? But some people say, hey, I sold mine at 32 like a champ. Now it's at 19. Maybe there's an oversold bounce. So that day it breaks below 19, goes to 18, reclaims 19. All those extra shorts have to cover. Those playing it for a bounce, buy it, and then you get an oversold type of bounce, and sometimes that starts a new move. So the 117 on the chart, which was a red dog reversal, was a pivot from January 9th. So on January 13th, it looked like it was going to break below that 117, go back towards 101. Instead, it reclaimed 117, closed strong, and then the following day it gapped up into actually the 120s and almost as high as 130. So
Mm-hmm.
a red dog reversal is a way to play a calculated trade, by knowing which way the algos are trying to steal your lunch. So the pivot is the action area, the rubber match, and knowing which way it reclaims it is your way to jump on. Sometimes you can get red dog reversal tops too. And there's all different types now, so definitely Google red dog reversal. There's a bunch of videos, a lot of examples, and I think we even may have done a small ebook on it.
Yeah, I do believe so. Okay, let's get to some more of these questions. Ryan asked, so the corrective phase from February 16th, where's the oscillator now? And some spots on SPY that you might look for a bounce.
Okay, well, the oscillator was at like minus, I think, 62 on Friday. So you had Friday's move where we came off the lows, which was 393. If you want to put the SPY chart back up, if Greta puts back the chart, you'll see that on February 24th, which was my mom's 75th birthday. I did go to Florida that day. That was a pivot low. You had 393. That was when the oscillator was minus 62. The oscillator gets oversold at minus 40. So when something's minus 60, which is more oversold than minus 40, it's always a little bit more complicated to put on fresh shorts. You're better covering, considering, again, like I told you, February 16th, SPYs went below 409.50. At that point, the oscillator was like plus 50. So from plus 50 and minus 60, that down there was a better spot to look a little long and cover some shorts. So you had a move up to 401 this week. And now the oscillator is only minus 30. So we're not as oversold. So we're kind of in no man's land where things can get more oversold or who knows. So the only pivot you have right now is 393.64. That is Friday's low. We'll see where we open up tomorrow and see, do we hold above that? Do we gap up tomorrow? Who knows? New month, new flows, maybe. So that's your point of reference. We get below 393.64, the next real level doesn't happen until like 387. So we shall see. I like to identify points of reference to figure out, do we hold them? Do we break below and stay below them? Or do we break below, get some people out, get some people short, reclaim it, and then sometimes that could turn into a red dog reversal.
Okay. On the topic of oscillators, Chris asked what oscillator you use and if it's proprietary or available on most platforms.
Well, one is proprietary. One, I use a site. Another one is the McClellan oscillator. I think you could use the McClellan oscillator if you want to Google that and pretty much see it real time, and it'll give you parameters on what's oversold, what's overbought. And if you wanted to know what mine's doing, just ask me. A lot of people on the alpha team all day long say, "Oh, what's the oscillator at?" If they, I could tell when they're shorting into an up move after my day counts up to 4 or 5. Oh, where are we? Are we overbought yet? Because sometimes you get to a certain spot in the oscillator, and you'll kind of get a way out. Same way, if we're really, really oversold and they start buying, they want to know where the oscillator is. So this way they know how oversold we are and how close we are, and then they could use other tactics to buy into that. But when the oscillator is like neutral, it's not really much of a tool. Just when it gets extreme in either direction, and sometimes it gets really extreme, kind of like if you go to a casino, you see a big a line or a big audience around the roulette table. And why is that? Because the 7 blacks have happened. So everyone's taking red. I've seen it happen where 7 blacks turn into 14, and people are going to the cash machine. They're getting blown up. They're mortgaging their house because usually it's hard to get over 7 blacks, and it usually goes into a red. Vice versa. So same way, an oscillator minus 40 is oversold, but I've seen it at minus 118 at times. Same way on the long side.
Okay, so just a reminder for everyone that the chat is open for questions. Scott has been a professional trader for well over 25 years at this point, so he is a wealth of knowledge. Ask him your questions. Doesn't have to be about what we've talked about so far. Can be, anything you want to know about trading. Our next comes from Daniel, and this is more of a comment, but I'd like to get your thoughts on it. He said, interesting close. Below yesterday's low on SPY. NVIDIA closed at lows after failing 238 breakout. Could be a sign of the next move to 3850 to 3900. Traders just want continuity from one day to the next. What are your thoughts on that?
It's almost like I just interviewed you. What do you think about this close? You answered your own question. Yeah, as I look at the chart and I'm like, wow, this candle in the SPYs, kind of looks like the candle that happened on February 16th when it closed below two prior lows. Today, there was enough power to close below yesterday's low. Chances are you should be more neutral to negative than neutral to positive. The one thing that keeps you from getting too big to the short side today, I would think, is because sometimes you get new flows, which is tomorrow, March 1st. Sometimes when the oscillator is minus 35, it's hard to be so short. And you have Tesla's Investor Day. So I would rather be light tomorrow than super duper short, coming into tomorrow. But gun to head, I hate that phrase actually. I would think if I had to be something, I'd be more short than long. But I still have Meta overnight. Meta, didn't close well, but it was strong today. So that's like my only long, really. That's an active trade versus a legacy position.
Do you want to talk more about Meta? Do you want to pull up
Sure.
that
Did I
chart and
send you the
discuss
chart
it?
of Meta?
Yep.
All right, so I came in today. If you look at the chart of Meta, I came in today, and I knew 167.66 was the low from 3 days ago. You kind of have a descending trend line. You also have a decent amount of the earnings gap left over from 153. So it was a good setup to me. So, I wasn't long it overnight. I started buying it in the first 5 minutes on the pullback. It felt a little weird. It was up 3. I haven't been able to buy a stock up 3 or 2 and change in a while. I knew 173-ish was the level that if it cleared, shorts would cover. And PS, it turned into a really good morning trade. And then I sold into some strength above 177. And then I wound up buying back a little bit on the pull in. And I probably have a little bit too much because I got stuck in it the way it came in. But I do think it's one of the better stocks out there right now. They're trying to be efficient. They did a bunch of layoffs. They are looking to do a subscription business to raise some more revenue. They're in the future with the metaverse. They came out that their AI is helping them, with the Apple browser. So they have a lot of feels like good news around them, and the chart is decent. So I'm in that one versus most other things which look very, very broken, like a Google and an Amazon and a Microsoft and some of those.
Okay. Our next question comes from Nathan. He said, what do you think about slippage in the M2 money supply and dangerously low personal savings rate, lower than 2008? Do you see this as a lurking economic contraction? And how does this play into your long-term trades?
I love that question, Nathan. You know what, Greta? Let's put up a chart of the S&P cash for the monthly. Okay.
Yep. Okay.
So I did a chart of the S&P monthly for the first time in a while today, because a lot of people are trying to say, that macro-wise, we're starting to falter. So I wanted to show, if you look at the chart, could you see the chart? You could see how you had the move in the year 2000 to 1580, the move into 2007 to 1580, and those look like big moves, right? And then we broke above 1580 in 2013, which, first of all, if you look at that, that's like 13 years of a range. That if you accumulated that range as a 401k macro investor and had a great average cost, you got paid handsomely when finally we broke out above that range in March of 2013. But then you fast forward to where we peaked at 4,800 on that chart in January of 2022. That move from the pandemic lows all the way up, I wish I could have my little cursor there, looks ginormous compared to both of those major rallies that were considered historic. So this right here, in my opinion, is a historic rally. So the Fed is no longer your friend, right? No more QE. Inflation is sticky. The consumer's been resilient for like a year, but rates have just got here and they've stayed here. So the investor is just starting to feel it now, and the consumer. Even me, I try and take from my life, some common sense scenarios where, and friends, I finally see people finally starting to watch, a little bit of what they spend. And things are still expensive. I just went to my mom's 75th birthday. Flights to Florida were $800. I'm going away. Yes, I'm going in April. My son's in 8th grade to Dominican Republic with 4 families. 2 more families wanted to join, and the place is sold out. And it costs $1,800 for a ticket to get there. So people still are spending money. I also remember in 2007, 2008, there were 8-9 million people looking for work. Now there's still 9 million jobs open. So the dynamics are a little crazy right now where, we're not really in a recession yet, but things could happen pretty fast. And if you look at this chart on the monthly, if you look, we did a small red dog reversal. We pushed through 4,100, went to 4,195, came back in, and if this is like an inside wedge forming, chances are, if we don't hold 37.64, I'm not saying we're going to get there, which is a significant amount below 39.43, which was last Friday's low. You could see more. So I have multiple accounts, which I've gone over many times in Redler All Access and in Alpha Team. And some of you guys follow what I call the blood on the street account. My blood on the street account is my wife's account that started. Actually, this is a good lesson because my wife started working at UMDNJ in 2004. In 2004, the S&P was like, I don't even know, 1,200. She started putting in monthly money every single month. And then all of a sudden, the financial crisis happened in 2007, 2008. She didn't pull out. I had friends who thought they were cute. They pulled out of the market long term, and they missed the whole decline from 2007 all the way to the bottom of March of 2009, but they never got back in. And we went to 4,800. So my wife, not that smart, every single month put in money, every month. And then PS, she kept doing it. We took out 1,580 in 2013. We went to as high as 2,200. And then my wife went into private practice, and they said you can no longer have a state-funded long-term account and contribute to. So that became my wife's blood on the street account. But that account got built during the financial crisis. So now I use that for purely crazy opportunities to leg into the market, to net money. So a lot of people know in 2018, I legged in 3 times. In 2020, I legged in 4 times. And then last year, I legged in twice, 2 different times. And then now it's sitting in cash. So people are like, when are you going to put your blood in the street account to work? And right now I don't have it to work. So if you look at the chart here, if M2 money supply continues to constrict, if consumers start to feel it, if earnings continue to go lower, if we go into a recession, a lot of ifs, which have a high probability to be, unfortunately to say, then chances are, we could see 37.64. We could see the lows of last year, and then who knows, maybe even lower. Mike Wilson says 3,200. So for that account, I'm going to space it out into 3 or 4 buys because I can't put contributions in. So I'm going to time it because I'm a market timer, and I'm going to let you know when I'm doing it so you can do it too. So that's one account. My other account, which is my own 401k, monthly flows every month. She's a 403b for a private practice every month. My son's in 8th grade, okay, for college 520 every single month. So long term, if you're a lawyer, a doctor, a fireman, a policeman, and you're watching this, you know what? Just put money in S&P every single month. Okay, if you're trying to be cute and time the market and you think they may be going lower, then these are your 3 levels: 39.43 last Friday's low, 37.64, 34.91, and then 3,200. They're all on there, and I'm going to only wait for extremes. I could buy 4 tiers. So far, we haven't been extreme enough for me to buy more than 2. So if that's the case, that's the case. If we get to the 2 or to the 4, I want to make sure I powder dry, just in case all these experts that keep calling for some craziness in the next 6 months to 12 months, I have powder dry besides just my long-term inflows. And then actively, which is what we do here, I'm going to make sure if we're below the 821 day like we were last year, or even ARC, if you remember ARC, that I annihilated from 2021, we're going to be out of the way. We're going to test levels using that RDR that I showed you. We're going to try and short bounces, and we're going to just be careful and just wait it out. Cash is a position. If you're active, you don't need to be in everything. You need to know what you can handle.
Okay, so I want to talk a little bit more about, since we're on the topic of economy, recession, all of that, the Fed, and your thoughts about the Fed. You mentioned earlier you see 2 more rate hikes this year, holding through the end of the year. That's what the Fed has pretty much said they're going to do. But the latest conversation that we're hearing from Fed officials is we might need to do another 50 basis point hike at the next meeting. Now, CME Group's Fed Watch still shows 25 basis points is what the market is expecting. Where are you personally on what the Fed might do in 3 weeks?
I think they're going to go another quarter and then maybe go another quarter. I don't know why they would all of a sudden go to 50. It also depends where the market is, right? By the time of the next Fed meeting, if we're bounced and we're back above, 4,000, 4,040, they'll say, hey, the market's being cute. Maybe we can go 50. If we're down near 3,900 and we're still, 6% off the highs from early February, chances are they'll do a quarter so they don't, cause some kind of dislocation. But I do still think they have to go more, and they have to keep it higher for longer. That's the whole thing. They'll get to their ceiling, and then it's how long are they going to keep it there? So this way it slows the consumer down and just slows the economy down. So this way it brings prices down. That's what they want. They want to they want to wring out the excess. They want to wring
Hmm.
out a decade of interest rates way too low and free money that the Washington gave out because of the pandemic in 2020 and 2021. And
Yeah.
unfortunately, it's a process that has to happen. And cycles happen, and we have to make sure that we don't get frustrated. We don't get what's the word? Just kind of like we don't lose our cool. It's easy to lose your
Hmm.
cool in this market, and then you lose money for no reason. And then that slippage happens that your other guest was talking about. So at this point, I do think they're going to go at least a quarter. If they go a half, we'll see what happens. I would think that the knee-jerk reaction would be
Yeah.
lower.
Yeah.
And at this point, so lower is not so bad. Get it out of the
Mhm.
way so it doesn't suck in new money, and let it happen faster than sooner. And that's the problem, is we're all a little spoiled because if you look at the move that happened in 2020, look how fast that down move happened, and look how fast we reversed back up. This has
Mhm.
been slow and down and
Yeah.
predatory. The computers are trying to make everyone feel as bad about themselves as possible so then they can make their money.
Our next question comes from Josh. He asked, "What are your views on trading versus investing in crypto over the next 3 to 5 years?"
If you're going to invest in crypto, I would only invest in Bitcoin and maybe
Okay.
Ethereum.
Okay.
Invest in Bitcoin, put in monthly flows, just like an S&P fund. And I
Mhm.
think overall, over time, Bitcoin is going to be around for, forever. I don't know forever, but for a long time. And Ethereum also.
But
But
you
this,
don't see any need for active like trading in crypto at this point?
you could trade Bitcoin also. I traded it
Mhm.
this year. I bought it in January when Bitcoin was like at 17 and 18. I sold it 21. I bought it back and I sold it 23. But if you're investing, the only thing I think that's investable between us is Bitcoin and Ethereum. If you're going to trade, you could trade altcoins too, but I
Mhm.
would think 90% of the altcoins are going to be zeros. So don't invest in altcoins. Don't invest in, I sort of like people who were living and dying by SOL or living and dying by you name it, even Luna before the debacle or FTX.
Yeah.
So don't put a lot of money in altcoins. If you're going to put money for the long term and you think it's for the long term, just go with Bitcoin or Ethereum.
Okay. Our next question comes from Kartik. He said, "What, according to you, is a good time to enter when market moving news comes in?" He says, "I've noticed that whenever I enter a sentiment analysis based trade, the volatility usually takes me to deep losses when using margin first and then moves to green. Sometimes it also happens that it starts marching to the green area." He gave an example of trading options on index event days/releases.
The bottom line is the computers are faster than you. There are algos that
Mm-hmm.
scrape word sequences well before you even see it. So before a sentiment traded move happens or a news, created event happens, the fast money already happened. So what you probably should do is before you get sucked in, take a deep breath, let it pull in a little bit, give you a point of reference, and your first buy will probably be the wrong buy, and then the next buy will be the right buy, and then use your retracement rules. If something goes up, just say $4 fast, and it's
Mm-hmm.
really going to be up $8, it probably doesn't pull in more than a dollar. If something goes up $4 fast, and then you buy it at only up 3, and then you buy it only up 2, and then it's only up 1, chances are it should never have been up $4, and there's no real volume there. You also look at the volume. You need volume to continue. If something that's traded based on news happens, it's got to come out with like a 5-minute volume bar, and then it has to continue to have that rate of volume thereafter to support prices to continue it. So the first move is usually a move that happens fast by the computers. What you should do is wait a little bit, let it come in a little bit, settle, and then you buy it and then you watch the volume.
And then he also had a second question. Do VIX, DXY, the dollar index, and SPX divergence work on shorter time frames?
Not really. I think the
Okay.
VIX is built to fail. VIX does reverse uh, reverse what's it called splits, and it's built to go to
Mm-hmm.
zero. The VIX
Right.
isn't the VIX that people think. People like, oh, the VIX is low, I'm going to buy it. Doesn't mean it's a buy. If, you only get 2 or 3 spikes in the VIX, each year, if that. And most people make more money shorting it because it's all short-lived. So I would not be basing your trades on the VIX. Maybe the U.S. dollar, when the U.S. dollar is at threshold, the U.S. dollar has become instrument that people look at to program their trades. So for a while, when the dollar was going up, computers were programmed to sell the S&P. When dollar was going down, it was programmed to buy. The same way when yields are up, programmed to sell. But those correlations change also. So correlations always change. It depends on what the market is over focusing on and what the narrative is. But as far as the VIX, I wouldn't use it as a vehicle to hedge. And if you have a big call spread on 3 months out, every 3 months, you might catch it once or twice, but it's something that I would just be very careful with.
You mentioned yields, and right now we have this extremely, extremely inverted yield curve. The 2-year is way higher than the 10-year, and it's been that way for quite a while now. Everyone says that's a signal of a recession to come, but we still don't have technically a recession at this point. We have, as you mentioned, a really strong labor market. People are still spending. What are your thoughts on the inverted yield curve and what it means for the market right now?
I think about it in the back of my mind, but it's not basing my decisions on. It's in my mind telling me that, hey, maybe a recession could happen, but some people think that's a broken situation also. But it just depends when. Everyone in the world said the recession was going to happen in the first half of this year, and we rallied and they knocked their teeth out in January. It was much better to use the 8 and 21 day and watch charts and look at the professionals who said, hey, look at the yield curve, get short. You know what? If you shorted, it was hard to stay solvent and stay with the trade. So although they say the bond market is right, and it might be at some point, it's not a timing mechanism. It's just something to think about as a coincidental indicator and trade what's in front of you. Look at the reaction to earnings, the reaction to events, the reaction of the leaders, what moving averages are we above, and then in the back of your mind, think about the macro backdrop. Right now, the macro backdrop is definitely challenged, and that's why you can't, even if you're loving the long side, you have to be a little careful because it might just be a sentiment induced move. But at this point, because too many people are short because of the yield curve, but then something happens and no one expected and then it runs. But I would say the yield, it's definitely a little bit concerning. We should slow down in the next 3 to 6 months. Common sense wise, rates where they are now for longer is definitely going to slow down spending. For instance, my wife has a lease, a car that she had 3 years ago. The same exact car that she had 3 years ago on a lease is now $400 more. So what did she do? She extended the lease 6 months instead of getting a new car just to see what happens. So I'm saying that's like normal life.
Right.
So you think about common sense and you think about slowdowns, and then all of a sudden the mechanicals, wind up coming to an equilibrium.
The latest piece of data we got today was consumer confidence from the Conference Board. And a big focus for the most recent consumer confidence readings has been on the expectations index. That dropped to a 7-month low of 67.9. So we're further below what most consider kind of a recession threshold of 80. We're dropping further below that. So that would be an indication that we're probably going to be in a recession in 6 months to 12 months. At least that's what consumers expect to happen. Also, inflation expectations, although a little bit better, consumers still say they see inflation at 6.3% annually a year from now. That's some hot inflation. And if you look at a year from now, people are hoping that the Fed might start cutting rates in 2024. Where do you fall in that little
I would say
mix of things?
Again, that's a cautionary flag. But again, markets have to manipulate the action in order to get the real people out. So sometimes they induce little rallies to distribute stock before things go lower. What you just stated, I think, sounds very true. I don't think that they're going to cut rates anytime in 2023, unless China invades Taiwan or they send weapons to Russia to fight the Ukraine, and then things go haywire and the market falls 15% in 6 weeks. I don't think there's a shot in sugar honey iced tea hell that they cut rates. They have to keep it higher for longer. So I would think in 2024, maybe because the consumer is getting hurt, earnings are going lower, we're getting negative GDP, we're going into a recession, and the Fed got what they wanted. Right now, the Fed doesn't have what they want. They're not even close.
Right. Our next question comes from John. He asked, what is your favorite time frame with favorite strategy?
I like to look at daily charts, right, and see what things are working, where the setup is. And then usually, depending on the market, like the futures, if they're up or they're down in the morning, and then I use my daily charts and my pivots, and I like to see like some kind of action area where like a strong stock closes well. Maybe the futures are down because of something happened in China or Europe, and that stock that was strong is lower. And then my favorite setup is to buy that red to then go green, and then maybe even go higher than where I thought it would be higher if we were in a normal market. So I like taking advantage of over emotion, using daily charts and looking for signals in the first 30 minutes of relative strength or relative weakness in order to add cash flow to that trade.
Okay, and a good question from Joseph here. He asked you to tell us about the T3 culture and the steps that new traders at T3 should look forward to in order to become a profitable trader.
Well, I would say the T3 culture to me is awesome. Like I have the Alpha
Mm-hmm.
team. Usually there's 400 to 500 people on there, and everyone's just trying to share their expertise. Some
Mm-hmm.
guys trade bios and are listing different events with different data, and they're experts, and they try and give out some good advice and clues. Some guys trade the financials, and they're always watching yields, and they're watching this. Everyone has their own expertise, and I feel like it's one of those things where it's like uh, 400 eyeballs are better than two. If
Right.
some kind of news comes out, boom, it's there. If I ask a question because I'm busy, I have 6 monitors, I'm talking to Fox Business or this or that, I'm like, hey, what's the earnings state of that, or what was the news here? Boom, it's like my own think tank, and they're all really seasoned traders, so they're posting it there before I have to go look for it. So everyone
Mm-hmm.
helps each other, and everyone feels good if they're right. Nobody wants to be wrong. Everyone wants to say, hey, great call, great call. Today I was in Meta in the first hour of the day, and a lot of people made really good money. So it felt good that not only I made money, they made money. So
Right.
that's I feel like the culture of the Alpha team is that everyone tries to help each other. It's not like in a brokerage firm, where I've had friends where they get a billionaire on the phone and they open up an account and he sends them half a billion, or just say $20 million, and then the other guy is like jealous because the other guy landed a big account. No, if you're a
Mm-hmm.
trader, you could both trade the same stocks. There's enough liquidity, and if you're both right in direction, you could both make as much money as you're comfortable making, and high five each other. You're not stealing each other's lunch. You could both trade Tesla, you could trade Meta, you could trade Google, whatever it is. When there's a good setup and there's no competition, it's just everyone helping each other and pointing things out. So that's what I love about this job, is that there's room for everyone to succeed. And when you have a don't trade alone mentality, the Alpha team really, to me, is fantastic. I think all the rooms at T3 are the same way. Yeah, and if
Mm-hmm.
anyone is sarcastic and anyone beats somebody else up, they're getting one strike, and 3 strikes they're out. I don't care, the subscription payment, this and that. If somebody's fluffing feathers and being a jerk, I'm just going to get rid of them. I don't need them. Same way on Twitter, I probably block 8 or 9 people a day, because I just don't need them in my life.
Outside of Alpha Team, just talk a little bit about the culture of being a professional trader with T3 Trading Group. Because as people join T3 Trading Group, they do get access to the Alpha Team and some other rooms with T3 Live. But just talk about that culture and what it's like working with other professional traders.
I just think, all the professional traders are great guys. They all have great karma. Like
Mm-hmm.
they all try and do the right thing because they don't want anything bad to happen to them when they're trading. They don't want bad news happening to something when they're overnight. They don't want good news happening. They just want things to go and have some kind of continuity and play by the rules. As a trader, we have like this good book and a set of rules that things should happen, according to this arena, and they don't want things to go wrong. How could something go wrong if you act like a bad person? You
Right.
yell at the trader across, you bang your keyboard, you blame someone else for a bad trade. So I feel like traders, use a lot of karma. Not they don't hope and wish and pray for things to happen. They just want things to happen based on their process and nothing to interrupt it. And they don't want to do anything to interrupt it. So all they want to do is do good things around them to create a nice halo. So, so when opportunity meets preparation, you get a little luck versus a smack in the tush.
All right, we have a few more questions to get to. Everyone watching, go ahead and submit your questions now so we can make sure that Scott answers them for you. While we're on this topic of T3 and the culture at T3, Joshua asked, what's T3's gamble and expectations of new traders? What should new traders focus on for consistency?
I'll just keep it simple. It's
Mm-hmm.
a long process if you're a new trader. If you were going to graduate from college and become a lawyer, how many years does it take you to become a lawyer? I don't know.
Hmm.
I don't know. Is it four, Greta? What is it? I don't remember. Like to be a lawyer, you
I'm not
probably have
sure.
to go to law school for 4 years and spend another $500,000 to practice law. So
Yeah.
coming out of college, if you want to be in the financial markets, why do you think within 3, 6, 9, 12 months you're going to be making six figures? You have to pay
Hmm.
your dues there as well. My wife's a neuropsychologist. It took her 7 years before she could actually make money, and then she owed six figures.
Hmm.
So just don't expect it so fast. Just learn, simplify it, lose less in the beginning so you don't have to make it back when you finally get it, and
Hmm.
then be slow and steady and work on your process. And everyone's process is different. Everyone has something that makes them tick. Some people like to be short, some people like to be long, some people love to play breakouts, some people only want to be intraday, some people only want to trade pre-market, some people want to trade futures. So, but for the beginning part, just watch how things move and learn a lot about technical analysis, learn a lot about charts. And I think Sammy's, he has, I know he's got,
Trading the pristine method.
yeah, yeah. I
Yeah.
took that in 2000. I think I took that in 2000, 2001 when I was over at Broadway Trading. I took it with the owner then, Greg
Hmm.
Capra, and I learned a lot. And I still remember it. Bar by bar analysis. What do candlesticks mean? It kind of gives you some rules to trade actively. So, Sammy's
Hmm.
course I think is something that every new trader should take, as well as my path to profits. And one or the other, or take both, whatever it is. I think T3, does advocate for both of them, and just also then don't do too much, don't overthink it.
Right.
Get in the moment, trade, and just try and have some success, and success breeds success.
John asked, what are your thoughts on coin after today's move and SI in the same sector with recent large investor fillings?
Let me see. It was Coin was today stronger than other things, and I wasn't sure why. It wasn't like Bitcoin had a big move.
Yeah.
If I could post a chart, I would post Coin, and Coin broke its little descending trend line and reclaimed the moving averages. Coin hit a high of just say 67.50. What I would call this is like a day one. Usually on a
Okay.
day one, okay, this is a good lesson actually. A day one happens where there's a day one igniting bar of a new potential move. So what usually would happen on a day two, either you get upside follow through. So just say you took 500 shares of coin home, maybe it opens up $2, you sell some and hold some. If, because it was up so much today, the futures are down, if it's going to act special, it should hold at least 50% of today's move tomorrow, and you should be able to buy it to go from red to green, buy it in the hole. This is one of my favorite tactics, which someone asked me about. Like just say it's down $1, goes green, pushes up. You then sell what you bought in the hole, and then you keep your existing position. And then if it happens to get above today's high tomorrow, then you could even add to that. So
Right.
today in coin, if it's any good, it should hold a decent amount of today's move. And it was a day one, and the whole sector kind of moved. SI didn't move actually because someone pointed out coin, and SI didn't break above it. And someone pointed out square, which is block, looks like something I'd watch tomorrow. Like if coin gets followed through tomorrow, then maybe square is something that follows coin a day behind. So when sectors are in play, you want to see all 4 or 5 different stocks in that sector. And right now, like I mentioned before, the dog's got to bark for the tail to wag, and coin is basically the head of it. Actually, really, Bitcoin is, but coin
Yeah.
in far as equities.
Nathan asked, how much do global factors play into your trades? For example, Chinese markets with Alibaba.
Every morning I wake up at around 4:30. First thing I
Hmm.
do is look at what happened in Europe, what happened in Asia. If
Okay.
Europe's down 1% or so, or Asia's down 1.5%, I think to myself, where should the S&P futures be based on the day before? So this is 4:45, and at this point, I'm probably in my sauna. And then I'll look at the S&P futures and just say they would probably be down 15 handles. If Europe's down 1% and Asia's down 1.5%, chances are global markets are having weakness. Question is, were we weak the day before, so they following us? Were we strong the day before, and we're following them? So it all depends on who's leading what and what's happening. But I always look at what's happening overseas in the morning to see how it dictates the futures action. And then if Europe and Asia are both down and we're up a decent amount, I'm like, okay, there's got to be some news domestically to have us up if overseas is down. So I definitely look at them every day. It's not, black and white as far as, what has to happen, but I look to see if there's divergences, and I look to see, what narrative are we in right now. Asia went from strong 2 months ago to back under pressure because of, I don't know, them maybe giving weapons to Russia, the balloon scandal, but the Asia markets have been weaker lately, and I don't give them much attention. I've been giving more attention to Europe because we've been kind of
Okay.
playing in lockstep, and Europe's been
Yeah.
a tiny bit stronger than us.
Okay. Kartik asked, what's the one sector that you are bullish on and the one sector you are confidently bearish on, given the new data coming in today and the economy in general?
I'm not overly bullish on everything, and I'm kind of actively bearish on the S&P. I
Okay.
think energy sector that people were hiding in 2021 and 2022 looks very vulnerable. I think the banks that are supposed to be so strong because of rates aren't showing any upside momentum. I think not every tech stock's created equal. It's very a stock-specific, setup-oriented environment until we get to a lower level that the market could have a real active sequence long like it had, and it's right now not there. So I wouldn't try and be so sophisticated and talk to me like you talk to me on TV, where it says, "Oh, what sector do you love best right now?" You know what? If the S&P is going to 32 or 3,000, every sector is going to go down.
Yeah,
One
that's
is
true.
going to go down a little less than another. You might as well have cash as a position, especially as a trader.
You mentioned the energy sector, and Nathan wanted to get your thoughts there. So expand a little bit more what you're feeling about nuclear, solar, hydrogen, the energy sector, as a whole right now.
Well, you just named lots of different sectors.
Yeah.
If you look at Chevron today, Chevron announced more of a dividend and the buyback. It opened up $2 went red. That's not bullish action.
Are you
Okay,
seeing kind of, sorry to interrupt, but
you can
there's
interrupt.
there's your old energy sector, which is oil,
Yep.
crude, all of that, Chevron, Exxon, all those guys, those players. And then you have your renewable energy sector, nuclear, solar, hydrogen. Do you see those two sectors behaving differently in the stock market in the years ahead? Or not the years, but
Old energy is rolling
this year,
over. Old energy was like a value sector the past 2 years while they sold
right?
growth. So I do think at some point growth is going to take over again. Hydrogen, solar, fuel cell. It has to be the wave of the future. It's just a matter of when.
Yeah.
And since 2001 when the ARC, fund blew up with Cathie Wood, everything that was unprofitable and pie in the sky that was you had to own for 3 years turned into you had to sell. Last 2 years
Mm-hmm.
you had to own value because they were making so much money. Now it does look like the XLE, Oxy, CVX, they all look kind of like they're rolling over. And oil came in a lot. I guess if China comes online, maybe consumption and oil can go back up. If the war in the Ukraine ends anytime soon, maybe that'll create some demand, or not. Maybe that means that the pipes will open up. At this point, XLE does not look good. Solar, FSLR came after the close. I don't know what it's doing, but it's sloppy to me also.
Mm-hmm.
Like ENPH is broken. Nothing really looks so good. Concept stocks are only concept stocks until the market makes them, a market leader. And right now, solar stocks are not market leaders. Fuel cell stocks aren't market leaders. The old school energy used to be, and now they're rolling over. It's kind of more of a defensive position for now, unless you really have some kind of base case and you have an opinion and you have no time frame and you're going to just let it happen, which to me that causes bad investments because that's what people thought they could do for the last year and a half.
Mm-hmm. Louise said, Scott, you keep mentioning the computers when it comes to anticipating moves and how we cannot beat them. How do you play
By the way,
around
you can beat
moves?
them. You can beat them. You just need to be
How,
prepared. You need to know what they're doing. That's what the red dog reversal does for you.
right, so
That's
that's
what
his
we're prepared
question.
for.
How do you play around moves that cannot be fabricated by the retail crowd on days with news? How about days without news? Whose news do you pay attention to?
If there's days that no news, you just look at the action. You look at what's happening in each sector. Do we open lower? And if all sectors are red, which sector goes first fast, and
Mm-hmm.
turns green, and then maybe the futures come up, and that's a sector that leads for the day. Maybe if we open up like we opened up on Monday, the first sector that goes red, and the spies are still up 15 handles, we go to red. That first sector that went red is going to be a lot lower. So you look at just the action. So I have one set of a screen that has all these market views that shows me every sector, so I can see a snapshot of what's happening in the morning And then as the morning develops, I could see where the relative weakness is, where the relative strength is, and then figure out if I want to be involved or not. If you have a big binary event, you better keep risk down because anything can happen. It feels like the last year, every binary event's been big, whether it's a CPI, the PPI, the jobs report, the Fed, and lately it does the opposite of what the consensus thinks.
Yeah. Eddie said he noticed that a previous question mentioned options on the index volatility crush on the major economic events. What is your favorite option strategy under the current uncertain market condition?
Well, I tend to use option strategies a lot when we're overbought or oversold. If we're really overbought, what I usually do, which is a little risky for newer traders, is I sell premium. Like if the SPYs go up for 5 days and the oscillator's plus 60, I'll sell SPY calls naked, but I would have also shorted the SPYs right there. So if just say the SPYs are at 401 like they were on Monday, and people are like, oh, well, we're in a bear market, I'm just going to short the SPYs at 401. I would say, hey, let's short the 403s. This way we have $2 a room and we can get $1.40 for it for 2 days from now. So sometimes when we get an extreme move or I'm looking to be short, I'll short premium so it gives me more room. That's one way I use options. Another way is in earnings. If I think there's a great setup, I can't take the stock long or short, I'll buy calls or buy a call spread or buy puts or buy a put spread. And I use options to define my risk if I have a thought process on a certain situation.
Our next question comes from, sorry, I'm scrolling through these, John, and he asked if you use or have a favorite hedging strategy.
Favorite what strategy?
Hedging.
Usually if I'm in like 10, 12 positions and the market's overbought, like I just said before, I'll short SPY premium higher, where I wouldn't mind getting short the SPYs if we get there. So sometimes if I short the SPY premium higher and it gets there, the premium's out, and then if it goes above that strike, they short it to me. But by that point, we'd be super duper overbought, and then I'll get shorted, and then I'll give it a day, and I usually make money on the hedge, and hopefully selling strength with the positions that I have. And then sometimes if I feel like we're going to go down and I want to make more than just premium, I'll buy sets of puts, and then if we go lower, I'll turn it into a put spread. But I rarely, hedge with like the VIX and with currencies and stuff like that. I'm not that sophisticated. I'm a very simple guy.
We talked about NVIDIA earlier, and I've had you wrapped up here. So Daniel pointed out that NVIDIA filed a $10 billion offering after the close. And there's been some discussion here as that might be why NVIDIA is down on after hours. So if you want to talk about that, give your thoughts. This is kind of like a look at what discussions can be like in the VTF. Yeah. So
I'm not long NVIDIA. I was long NVIDIA today, and thank goodness I got out of it.
Yeah.
I got out of it. Why? Because it fell $4 as if sellers took over, and my trade changed. I was like, I'll be long NVIDIA at 234, and if it gets
I'm gonna pull up the chart for everyone just so if you want to reference it. But I know there's a big after hours move, so it might not matter.
If you look at the chart in NVIDIA, there's a gap there from earnings 230. Sometimes these earnings gaps hold and then give you a continuation move. Like I told you before, I give myself a C+ in the week because I was trying to buy 236 to 238 to play to 242. And then today, if you look at this last candle, it wound up closing on its lows below 234. Thank goodness that got me out, because for me, I was, kind of had FOMO of missing a move to the upside and missing that momentum. And instead, it closed below it. So I had no reason actively to be long it. My reason changed, and thank goodness, because if this would have closed strong and closed around 238, 239, I would be in this few thousand shares and I'd be down 7 points and I'd be pissed off right now and probably say I'm leaving. I'll be back, tomorrow. But anyway, now it's below 230, and the 8 days like 225 or 226, so you'd have to deal with it. Some people, though, I'll be honest, some people are probably long adverse 230 because that's the post earnings gap, and if you are, I can't tell you did the wrong thing, except for hopefully if you traded with a tier system, you had less than if we looked really strong today. Okay. Let me look what Meta's doing, because I'm long some Meta overnight. I bet you it's bringing it down. Not too bad.
Well, you would expect that NVIDIA to drag on the Qs as well, right?
A little bit. It is a shelf, so it's not like NVIDIA's lowering their earnings guidance
Right.
or something fundamentally. They're just raising money while their stock is, I guess, and rates are where they are. Well,
Hmm.
ultimately, it's not great. Um, but it seems like the street knew, somebody knew, because
Yep.
the way it was trading at 1 o'clock and 2 o'clock was different than where he was trading at 3 and 4. That's why you watch the price action, because everybody always knows something. And, someone knew that this was, because what they do is when you have place a shelf, they shop it around to major institutions. So these institutions were calling on their phone to the buy side saying, hey guys, there's a
Hmm.
shelf coming. Not that I've ever gotten that phone call. I don't have a phone on my desk, but
Uh, I saw
fugaziness of Wall Street.
I saw an interesting tweet from you yesterday, and I want to talk about it a little bit. You were tweeting that you about things you like about the market, and you said you love stock buybacks. You got some pushback from people saying they don't like stock buybacks. Why do you like stock buybacks? What do they mean for the market? What do they mean for a company doing it? Explain.
It means that the company believes in its, I guess, in itself somewhat and doesn't see better use for their money elsewhere. If they did, they'd be buying another company that they thought was undervalued. So maybe they think their own company's undervalued. I
Yeah.
guess I like it also because, mechanically and trading wise, I could see sometimes like you could have a down open in the futures and all of a sudden buyback machines usually turn on around 947, 950. So maybe you can make some cash flow buying Apple that usually has a big buyback or buying Microsoft to some of these mega caps. So it gives you ways to make cash flow if you understand the mechanics of the situation. I
Hmm.
just like also, I said I like free enterprise. I said I like capitalism, and
Hmm.
companies should not be, scrutinized for using their own cash to buy their own stock to create shareholder value for their investors. Who the hell
Okay.
is watching to tell them what they can and cannot do? They just want
Hmm.
to get their pocketbooks fleeced by taxing them so then they could do whatever the hell they do. Just saying, I'm not trying to talk politics or anything, but
Hmm.
you know,
Ryan said, Scott, it seems like you trade things that you know something about the company, what they do, news, and so on. But some traders deal in tickers and admit that they don't even know the company name or what it does. Do you ever trade like that?
I do have a go-to list. It's a very good observation. My go-to
Hmm.
list usually is pretty similar all year round, but then every now and then, some things that start acting like sugar honey iced tea come off the go-to list because they act bad and they don't deserve to be there. Some things stay, some new sectors come on. I learn how they move. I learn what they look like, what they feel like. So when they give me a signal, I can, sink my teeth into it. So my go-to list is like my bread and butter. Every now and then, the alpha team will bring me a situation and say, "Oh my God, look at the 250% of the volume in the first 3 minutes of the part of the day." I'll quickly look at the chart. It's a day one. I'm like, I'll try that too, because
Okay.
sometimes volume ignites a situation. So those are where I don't make a living on, but every now and then, if you catch one, it's fun and it can make you money. But typically, I make the majority of my money having my go-to list, charting them every morning, knowing my levels, knowing how they feel, knowing what to expect. So this way I have conviction in what I do. And then when they're properly set up, I could really add to my tier size and knock the ball over the fence. But if I don't know what I'm trading, I don't know much about it, I don't know where it's been, I don't know what it looks or feels like, it's hard for me to trade it for more than a small amount of shares to make some insignificant money.
Okay, Scott, we're going to wrap things up here. For everyone that's still here in the chat, I have just posted a link for our next event. That will be in just a little over 2 weeks from now, March 15th. Scott's counterpart, Dan Darrow, will be joining me on that event. He runs the Alpha Team VTF alongside Scott, and Dan is an options specialist. So we'll be talking a lot.
Guru.
Yeah, he knows so much about options. So
He's also
our
really good with bios too. He's a really good, does his homework on bios. Like every trader has a niche. Like mine is like mega cap techs, semis, the indices. He knows his bios. He knows a lot more than that too. But I'm saying, every different trader has their own really sweet spot, and his sweet spot he does really well with bios too.
He does. Okay, so everyone, if you want to register for that event, I did post the link. I don't know if you can click it. I can't tell by how I'm looking at it, but I know you can at least copy paste it. That will be on March 15th. Please join us for that. And again, Scott is a professional trader with T3 Trading Group, and he runs the Alpha Team virtual trading floor with T3 Live. If you want to work with Scott, just type Alpha Team VTF into your Google search bar and it will come up and you can join. You can work with Scott and ask him these questions like we've had here every single day. He's there to talk to you along with the other moderators in the room. So
Yeah, usually I have this on.
and you get to see Scott's trades in real time. So this
Yeah,
positions disclosure that I have here at the bottom of our screen, that's changing as Scott is buying stocks all day long in the BTF in real time. So you can see all of that. Okay, thank you so much, Scott, for joining us for this event. And
thanks, Matt.
everyone at home, I hope you enjoyed. Thank you.
I appreciate it. Happy Tuesday. Good
Yes,
luck tomorrow.
happy Tuesday. Good luck tomorrow with the start of a new month of trade.
Yes.
Scott.
Let's see if some new flows come in and we'll figure it out.
Okay. Audio. Bye, everyone.
Adios.